In this video, we will learn about various types of advances in a contract. What is an advance payment? In contractual terms, an advance payment means paying money to the contractor before the work is actually done. Usual forms of advances paid to the contractors in a construction project are the mobilization advance and secured advance. For every advance payment, the contractor must provide some guarantee to the client to save their risk. Why? Because the advance is being paid to the contractor before the intended work is actually done. So if in any case the contractor leaves the work or the project is suspended, then the risk of the client is not covered. Hence, for every advance payment, the contractor is required to provide a guarantee to the client in some form to save the risk of the client. We will talk about mobilization advance first. It is a payment released to the contractor by the client at the beginning of any project and at some predefined points of a project duration as per the contract. The intention of providing a mobilization advance to the contractor is to help the contractor to purchase or rent resources for setting up the project infrastructure and meet up the initial expenditures of a project. Mobilization advance reduces the need of working capital for the contractor. It is generally 5 to 20% of the contract value, but the percentage can vary depending upon the specific requirement of cash quantum for the contractor at the beginning of the project to start the work and meet his requirement of initial expenditures. The mobilization advances are generally paid against submission of bank guarantees or corporate guarantees or bonds, which is to be provided by the contractor to the client for an equivalent amount. This is to cover the risk of the client. In some cases where the percentage of mobilization advance in the contract is high, usually more than 10% of the contract value, a part of it is paid to the contractor at the beginning and the remaining in phases as mentioned in the contract. In that case, the conditions are mentioned in the contract which is to be fulfilled by the contractor before they receive the remaining part of the mobilization advance. This type of conditions may be the mobilization of a few resources as agreed in the contract, or maybe execution of certain percentage, say 20% or 25% or 30% of the contract value before getting the remaining part of the mobilization advance. This type of conditions are predefined and mentioned in the contractor and mentioned in the contract. The workflow of the mobilization advance is generally like this. The project is awarded, then the performance bank guarantee or bond is submitted to the client by the contractor, then the agreement is signed jointly. The bank guarantee for the mobilization advance is submitted by the contractor along with the tax invoice for the mobilization advance, and then the first installment of mobilization advance is paid to the contractor. This cycle repeats for the remaining part of the mobilization advance if the mobilization advance is not paid to the contractor at a time and paid only a part in the beginning of the project and the remaining are paid in predefined points of the contract as already discussed. The pro tip 1: mobilization advances can be interest bearing or interest free. If it is interest free, the contractor should take it from client as soon as possible after the project starts. If it is interest bearing, then the contractor needs to prepare a month-wise cash flow, which is the detail of income and expenditure for the entire project duration, and take the mobilization advance in phases. That is exactly at the intervals when the contractor have a negative cash flow and they really need the fund support. This will reduce the interest part on the advance for the contractor and will help them financially. Pro tip 2: the contract manager should keep a track of the utilization of the mobilization advance taken in a project separately for each installments. Copy of the invoices, if new assets purchased, should be kept with this as evidences. This can be helpful if the client asks at later date for the utilization certificate before paying the next installment of the mobilization advance, or even be useful for an audit. Pro tip 3. The contract managers must have the conception about the fund flow status of the client and submit only the equivalent amount of the bank guarantee to the client up to which the presently the mobilization advance will be released by them. This will ensure the proper utilization and will avoid the idling of the bank guarantees or bonds. Pro tip 4. Mobilization advances are recovered from the running bills when a substantial amount of paid mobilization advances are recovered by the client. Withdraw the submitted bank guarantee or bond a full amount of mobilization advance and instead submit a reduced value of BG. This will free up the BG limit of the contractor organization, which can be utilized elsewhere. Now we will discuss about the secured advance. What is a secured advance? When the materials are purchased and brought at the site by the contractor, then in certain contracts, the advance of a certain percentage of the value of the material is paid to the contractor by the client. It is the payment released to the contractor by the client throughout the project against the received materials at the project sites. Usually the percentage varies from 60 to 90% of the invoice value and paid against non-perishable materials only. The clause should be explicitly written in the contract. The intention is to help the contractor to ease out their cash flow without waiting for the materials converting to the bill, which is generally a longer process. As secured advances are paid to the contractor based on the materials actually received at the site, therefore, no bank guarantee is required by the client for this payment because the materials already received at the site acts as the guarantee to the client. The paid SA amounts are recovered from the running account bills when the materials are utilized at the site and the bill of the corresponding work is raised by the contractor to the client. The workflow is like this. Materials are received in a project. The contractor submits the bill to the client for a certain period. It may be fortnightly, monthly, or even quarterly as per the contract. Then the invoices and the delivery challans are examined by the client. Actual receipt, physical stocks, and quality of the materials are checked by the client, and the client pays a certain percentage on the invoice value as mentioned in the contract. Pro tip 5. For secured advances against the running items like cement, steel, floating items, etc., the contract managers should ensure to keep the entry register, including quantity and value, on a regular basis on receipt of the materials. And the contract manager must also keep the track of the reconciliation statements of the materials every month and tally the same with the recoveries made till that month by the client. This will ensure that advance is paid against only the used materials being recovered from the running bills of the contractor. There are other forms of the advance payments also. It can be against the actual mobilization of equipment and machinery. If there is such a clause in the contract, this type of advance is paid to the contractor against submission of the proof of value of the equipment, generally the invoices, and recovered after a specific period of time from the RA bills. Advances against submission of bank guarantee or bond in special cases to ease the cash flow of the contractor, the client at their discretion and on request from the contractor may release certain amount of advance payment to the contractor against the submission of bond or bank guarantee of equivalent value if the situation permits for them. After recovery of the same from the running account bills, the BG is returned to the contractor.